So we're recording right now, and like I said, in this you know session here, we're gonna go step by step. My model. We're gonna break it down, literally every step that I take in order to get to the culminating goal. I know a lot of you are probably well versed at this point, but there are some who might not, be up to speed just yet, which is fine. Um, and again, I don't really think this is like a really difficult, setup to grasp whatsoever. So I'm thinking, you know, if you can kind of just get down, the base idea, which we're going to get into, um, I think that really will serve you well. And those three would just be the idea of liquidity, the idea of market structure, and the idea of um, imbalances. I mean, that's pretty much my model in a nutshell. And of course, the higher time frame context is very important as well. And that's something that I'm going to lead off with here tonight. But like I said before, when you don't have that higher time frame context, immediately, it's not to say that the model isn't going to work per se. It's just to show that due to a missing ingredient, for example, maybe your daily looks good, your hourly looks good, but your weekly, it's not very clear cut. If that's the case, the way that I look at that is not that, okay, I can't trade this. It's more of, okay, this is lower probability. I need to be very on top of where this trade goes wrong. And like I said, I was listening to a podcast, and someone in that podcast made a quote that I think, I was like, dang, this is perfect. And they said, and in short, you can't fix what you can't face. And how does that relate in any way to what I'm about to talk about? And really, that is essentially trading in a nutshell, right? You cannot fix your poor performance if you can't face the idea or the fact that you are probably going to lose from time to time doing this, right? Despite me feeling the utmost confidence and, again, using back tested practice, hours and hours of screen time watching my model, there are times where I'm still wrong, right? So, with all of that, I need to be able to face the fact that at some point or another, I am going to lose, right? And I went on a big riff today about um, just the idea that, if you were really dedicated hardcore into getting good at this, right? Whether you use your own model, whether you use mine, whatever it might be, if you really, really dedicated the time, right? Maybe at night, it doesn't even have to be a specific amount of time, but just go back in the day and whatever ticker it might be, pick a random ticker each night and go through and see all the instances where my model or your model has set up, and from there say, okay, oh wow, look, it played out here, boom, do a tally, right? Oh, here it didn't necessarily work. It went through the imbalance and it went below the low of the candle. I would have stopped out there. Boom. And you're going to start to see these add up, right? The one thing that I like to, or I still like about it, but I like trading with futures, and it gives you that data on how effective that setup or that model might be, right? And I used to really, really care about, oh, this is X, amount of success rate, yada yada yada. At this point, I really don't mind. And the reason for that is because I know more often than not my model is going to be successful, and it really is all coming down to me and how I control what my potential loss would be in that situation, right? Oftentimes I will steer away from taking trades if that range is way too big, right? And again, trading something that's either NASDAQ that's $20 a point, or something that's extremely leveraged, or if you are trading with a lot of contracts, right? Having a pretty decent idea of what that potential loss could be in a situation where things don't go your way, I think it's really important, because I've been in this situation. I'm sure many of you have been as well. You get into the trade, you feel as if you can't lose, and it goes below your stop price, or where you've identified it as a potential stop, right? So let's just pretend, oh, it took out the low of this candle right here. that's my stop out, right? And you're saying, oh well, there's an imbalance right here, and you try and stick and play this imbalance, and it doesn't work out, and then you get caught in quicksand, and it continues to drag you under, and then at that point, it's very, very difficult to come back from that loss, right? Not only did you lose probably a ton of money, but you also got beat down psychologically because you allowed not only a relapse of what you were doing previously, but also you might start second guessing yourself, right? And you wouldn't do that if you put in a lot of time. I can tell you that. But you fall down this path, and then you're endlessly searching, right? There's so many people who they're always just looking for the next best thing when if I'm just being honest, it's right in front of your face. It's just a matter of taking the time and effort and putting it into it where you feel confident enough to actually use it and take action on it. So and that's the thing. It's not one ticker. It's not one time frame. It happens all the time, all throughout the day, right? I can't even cover all of the ones that happen every single day. It happens too often. So I that's the thing. Like I can't control, oh, this setup's this setup's that, right? Because that higher time frame context, right? It takes time to break this down, and that's why I always echo and harp on the night before. You can literally get to your screen and go top-down analysis. You can essentially have your plays mapped out for the next day, right? And it doesn't take all that much time, right? And again, like the way that I just drop these little labels. Like, okay, if I have a green label, that means that we check out on the weekly and the daily time frame. I need to drop down into the hourly and see if my setup picks up. That's where I drop the alert, and if it hits, I go for it, right? I'll also have an alert for where I should get out of it, and I also have an alert for where I should look to take profits on it, right? So everything is completely mapped out prior to the trading day. It doesn't have to be this fast-paced thing, right? For anybody who is an athlete, right? If you had a good coach, you were probably told, slowing the game down, right? It's a big part of athletics, right? When things start to get fast, that's usually when people tend to make mistakes, right? If you could slow this down, and how can we slow that down? Preparation's huge, right? So if we can prepare and slow down what could feel like a million miles per hour, right? Especially if you're newer trading, you probably feel like these candles are outrageously fast. And it's not necessarily the case, right? If you have a higher time frame game plan and you have the structure in place, everything mapped out well, you're going to notice that it's almost like, all right, let's go, come on, hurry up, right? You're in that state versus, oh man, this is fast. Do I take profits? Do I sell? Like you really slow it down as a result of that, and I think that can be really, really helpful to a lot of people who might be, still just trying to find their footing or find a level of consistency that works for them. So anyways, just to get back to what we were talking about on topic. So as I go through this, I'm actually going to be typing it out. So, this might be a little bit difficult to do, but I'm going to do my best to do it anyways. So, and actually, I'm just going to do topics wise. I'll type that out, and then I'll go back and I'll type in the rest. So, so first things first, we need to have higher time frame context, right? Actually, let me look at this really quickly. Okay. Oh, I'm not sharing my screen. That's good. That's really good. All right, I'm glad that I caught that. Here. You didn't need the screen. Yeah, that's all good. Right. All right. Anyways, we all right. Anyways, we should be good now. All right. Anyway, to get into just the overall basis of what I'm going to show you guys, the first and to me probably the most important as a way to gauge the I guess higher probability setups versus your lower probability setups. And again, lower probability doesn't mean it can't happen, right? It's just it has less things lining up in the same direction overall, right? So higher time frame context, what does that mean? So anytime that I'm looking at any ticker, right, even if this is in that morning show that I do and it's really quick and brief, Notice how I always start on a higher time frame context, right? And the reason for that is because I don't want to just look at an hourly time frame and say, oh wow, this looks good for a long, and then I come back over and I see the weekly is feeding right into a bearish Mando model or something like that, right? Or maybe there's relative equal lows below, and that wouldn't be a situation where I would be really looking for a long opportunity. So to me, I need to have higher time frame context, right? And a lot of the times people throw out random names that I don't necessarily have charted, or they might just be one that I'm not, keeping tabs on at the moment. So I might not have charted that for some time, but I want to make sure that I'm as precise as possible and I'm on top of things so that I don't run into a situation where, maybe I even see it and say, oh, wow, this looks good on the hourly. I'm going to take this trade. And then I get into it and I look and I'm like, oh my God, I didn't look at the weekly, right? So I'm always top down. And you will also notice that I like to drop these little things. I used to never do this, and I used to just slide them up to the top, and I still do that for the most part, but I also throw these little green tabs on them for those are names that I'm relatively interested in comparison to the others. That kind of just again takes care of a lot of the work prior to me even doing anything on the day. But you'll notice when we do live trading, you'll see me, I scroll through all of them, right? I'll go through anything. And at that point, right, and I typically do that on the hourly. For anybody who's been joining live trading, I just scroll through on the hourly. And if I see a setup on the hourly, I almost reverse it. I say, okay, how does the daily look here? Is it a clear cut buy side? Good. Okay, boom, move over. And that's what I found on Chewy today. That turned out pretty well. But ultimately I have to have higher time frame context. Without that, my model to me, it's really not even my model at that point. If I don't have things lining up on a higher time frame, meaning my weekly setup is bullish, for example, right? So here, I'll just use this as an example, right? So Chewy on the weekly, right? If we take a look here and we zoom out just a little bit, we should note that our higher time frame trend, this is a much higher time frame. Okay, we took out those all-time lows, okay, with what price run? And ultimately, I'll do a lot of the work for you here, okay? There's your first Mando model completion. Again, we'll get even more specific, but there, I wanted to show you the higher time frame context and, why I would look to trade this on a smaller time frame. There it is. We swept that low right here. Let me zoom in a little more. Took that low with this price run, okay? This is also a bearish breaker, okay? Ready? High, low, higher high, break down through, retracement back up. There's your bearish breaker. You also have a bearish fair value gap there. Double the layer of confluence. That is in discount of a bearish range. There's your retracement into it. There's your meltdown lower, okay? And as you can see, this has a continuation type of move. Here's just another Mando model complete. We took out this low, okay, with what price run? From this high down to that low, retracement up into discount. Here is a bearish fair value gap in discount of the bearish range. There is your meltdown. Second Mando model complete, okay? Let's see the third. Did we get another? No 50% retracement, therefore no range is set, right? There was also no imbalance here that would justify a move back up to discount, right? Here, no 50%. No, oh, there it is, 50%, okay? There's your retracement, bingo. What do we have here? Bearish fair value gap, also turtle soup of these relative equal highs, right? Turtle soup does not necessarily always have to be bullish. It's just been for a while because the market's been on a ripper. But here's your 50% right there. There it is. And then there's your dump through lows. What was the price run that took out this low right here from this high? Let's just see this immediate run. Did we get to 50%? Not quite. Therefore, this is our current range. Okay. Now, I personally think if we look at this from a much larger scale, right, we can go all the way up to here, go from our high down to our low. This would be a weekly filter, this would be a quarterly filter. It's got a much larger range, right? 50% of that range is much higher. So while still technically in a higher time frame bearish range, if I feel like price is going to retrace up to discount of that bearish range, then ultimately I can look to play it long, right? We have a bullish breaker here as well, and we took liquidity, shifting structure. Now we're inside that bullish fair value gap here on the weekly. That's the structure for my trade. If that goes wrong, I lose. That's it. This is the structure for my trade. That's all. Relative equal highs up here. I think we can go get those. And below the low of the candle that created that imbalance is my stop out. So essentially risking $4 for a potential $15 gain. Sounds good to me, right? Everybody's different. That might not meet the risk reward criteria for some, but for me, makes sense. That's the idea, right? If I lose this, I'm out. It is what it is, right? I lose. Now, that is the higher time frame context that I'm talking about. So I need to come back down over here, make sure it confirms over on this daily chart as well. Good. Okay. Why is this good for me on the daily chart as well? Low to your high. Here's your discount retracement into a daily bullish imbalance right here, right at discount, deep into discount, I should say. Notice where I had the alert set. And, so far so good. I would like to see expansion. Now, that checks out for me. Right? Structurally still bullish, right? Now, let's come on over to the hourly and make sure this all plays out. Okay, now let's come over here. Let me fix this. And let's zoom here. Okay, now with the hourly, I can be a little bit more aggressive on a more immediate price run in order to try and, make decisions, okay? So where was that first structural shift, okay? Notice how we took out this little high right here. You see it's one little green candle in the mix. Okay, by taking out that high, to me that is a shift in structure. Okay, so immediately notice how there was no 50% retracement there. Here it is, discount retracement. Here is your bullish imbalance. There it is. Ooh, a little deeper. There's your run for high. Okay, so my model is completed for the first time there. Let's zoom in a little bit more, and let me just change this so nobody gets confused. Okay, here is your low to your high. Okay, I'm sorry. There it is. Discount retracement, bullish imbalance. There's your run for high. My model's complete. Okay, so that's how it lines up for me. If I don't have that higher time frame context, I'm not really looking to use my model in that situation, right? If I have a bearish daily chart, right, even if this sets up for me, I still feel, again, this could be very different, right? If we had a bearish structural shift and we were retracing into a bearish fair value gap, my model could, visually be setting up, but is it really my model? No, it's not. Right? The higher time frame context is something that's so important, and I think it was left out a lot in the initial teaching of these ideas, and that's why I think it's really important for me to at least share that with you guys there. So and again, I do like to see how everybody really in the post your charts and stuff has been posting the higher time frame setups. To me, if I find a couple good higher time frame setups, I can play those for months until its completion, right? If I have an idea of where the draw on liquidity is, right? So if I really firmly believe price is going up here, I feel like I can play these intermediate, smaller time frame price fluctuations, right? Keeping in mind that the overall idea is for price to go to buy side liquidity. And it's mapped out, right? It doesn't necessarily mean I need to buy it here and hold it all the way until there. I can scalp these smaller time frame bullish Mando model setups while all playing within the overarching trend on a higher time frame. All right. So if anybody has any questions about that, feel free to drop it in the side, and I'll continue from that point. But that is first and foremost the most important and the most overlooked, right? There are certain situations where you might, there could be, I don't know, a range setter, right? And somebody's bullish on a name, and you look at it and you say, well, we're in a bearish structure. This move is actually just getting us into discount, right? You're way ahead of the game at that point. Right? So next up would be higher time frame context / draw on liquidity. Okay, and again, I'm posting this after. So next is going to be market structure. Okay, so this kind of plays into that higher time frame context, right? When we talk about, you know, where is price likely to go, and again, you can do this on any ticker. It doesn't matter. I can pick and choose whatever it might be. It doesn't really matter at this point. But you know, how do we determine, you know, where price is likely to draw towards? What pool of liquidity is price likely to draw towards, right? And again, it essentially just meets the question: what is our current structure, right? And you know, I guess we could use this as an example here, where, okay, on Coinbase, we're looking at this run, and it is very important that you go back in time a little bit and you find where the structure was, you know, created. Where was that initial shift, right? Because there are situations where we shift structure and we don't retrace into discount, and we create these massive ranges, and then we get that little retracement down towards discount. You're spooked because you think it's a market structure shift, when in reality the structure was never set. We never got a 50% retracement, right? And that's why I see a lot of people who have negative feelings and chirp market structure, and I think that's, they just don't know what it is. They don't know how to identify, and that's the problem. If they knew how to identify market structure, they wouldn't hate on it as much, right? Because you think these little intermediate turtle soup moves are shifting structure, when in reality that's just us getting into discount and taking liquidity in discount of the range, right? We never got to 50% at that point. So it is very important just to go back in time. And again, this would be a perfect example. Okay, we took out this high right here with this low to that high. Okay, that would be our first market structure shift. And let me just label where we shifted market structure. There it is. Okay, you guys all see that? Now, by taking out that high, at this point, I'm essentially just looking for a discount retracement into a bullish imbalance, and you get your run for highs. That would be the first completion of my model, right? So from this point, what was the price run that took out this high right here? This is also a 3 drives pattern, something that we talked about last week. And you know, we'll get into more detail, of course, as we continue. But this is digging deeper and deeper and deeper into discount. Now, here it is again. We took out these highs right here with what price run? This low to that high. Here's your discount retracement into a bullish imbalance right here. There's your run for highs. Beautiful. Okay, so that's the second time my model completed. Now, what was the price run that took out this high right here? From this low to this high. Here's your discount retracement into a bullish imbalance. Here's your turtle soup. This is where everybody says, oh no, we shifted market structure. Did we though? This is the run that started that move. This is where our structure is being based off of. It's not this. This is just our discount retracement. So by us dipping below this low, all that's doing is sweeping liquidity in the inverse direction of our overarching trend, aka turtle soup. And that's where we currently sit on Coinbase. What was the run that took out these highs right here? From this low to this high, right? Now, why am I not banging the table on Coinbase, right? Well, I still think you can go higher. But here's the only caveat why I'm not saying this is an A++ setup. This is more of like a B+, honestly. And I'll tell you why. Okay, what was your first price run that ever happened? This is still a relatively new name. I know you might say 3 years, that's a lot of time. Well, when we're looking at it from a weekly perspective, we don't have a million candles, right? This is not Boeing. We can't go back to 1969 and complete Mando models on that, which we can if you guys want to do that. But here is your first price run from your low, or your high, I'm sorry, to your low. Here's your retracement up into discount of the bearish range. There's a bearish fair value gap, right? No wicks on either side. That's a little bit of a tricky one just because it's the first candle that ever was created. But there it is. There's your melt through lows. There's my models completed. Now, what was the price run that took out this low right here from this high down to, go to each green candle, just see whichever one you get that 50% pop, and we don't get it, right? There it is. So you're telling me this whole time you were playing bullish Mando models up just to 50% of the overarching range. Were you really? Yup. Now, this is why I would say this is a B+ setup rather than an A+ setup. Okay? Our overarching trend on a much higher time frame on Coinbase is technically bearish, right? technically if you want to get into it, right? I know it's a newer company, newer traded company, I should say, and we don't have all the information as possible, right? Only 3 years of data. At this point, could this really go either way? It could. I still think it's going to go higher, right? Why? Well, structurally, I like how we responded to 50% of our overarching range. We still have that bullish imbalance, bullish structure. Everything's still lining up on a smaller time frame for a continuation, right? Now, where do I really say that it's gone? We're shifting structure on a much higher time frame, and I'm bullish on this until it tells me otherwise, and that's if you get that higher time frame shift right here at 368.90, right? So again, this is just mapping structure, which is part 2, right? Having an idea of your draw and liquidity using the higher time frame context is number 1, most important. Then you obviously need to know how to just map out a range, right? And you need to go back until you see a specific shift, right? So for example, right, some people just look like this and they say, oh, well, price ran back up into here, into discount. Let's say we bounce and we take out this high and get into that bearish fair value gap, right? They could say, oh, that's a market structure shift. When in reality, it's really not. It's not shifting structure until we make a move above that 368.90, if that makes sense. Right? So this is a less informational type name and more of a gut feeling, if you will, right? I'm playing the shorter fluctuation or shorter time frame fluctuations, technically fighting the overarching trend, just because I think they IPO'd at a poor time and the overall market did terrible. It's a crypto company, and every crypto got whatted on in the end of 2021 into 2022. I think it was just poor timing. I don't think it's a terrible company, and I think crypto's here to stay. I don't use that outside stuff really ever, but I just don't have additional information at this point other than what we got right here. So that would be step number 2, market structure. Now, on to 3, and how do we trade it, right? So we have the context, we have the setup, we know all this. Now, how do we trade it? Okay. Now, to me, this is the easiest part. Now, we can continue to use Coinbase if we want. We can go to another name if you guys want. It doesn't matter to me. But I will show you. Let's see. Here, I'll answer that question in the chat in a second. Now, here's imbalances. Okay. We can structure every single one of our trades based on these imbalances, right? Now, the question I get asked a lot is, which imbalance is the imbalance that I really want to focus on and look towards, okay? I bet you if you go to a higher time frame context on Coinbase, I'm sure we can get additional answers here, okay, off that initial move. Now, that's our quarterly chart, not necessarily. Here's our monthly chart, and here's our additional context, right? At this point, you have multiple imbalances here. That's in September. Where are we? Right over here, right? There's multiple instances, but in a sense, if we have this higher time frame context, right, and we say this is a monthly setup, we're getting into a monthly bullish fair value gap here, and we know monthly, right, this can take time, right? This doesn't necessarily have to happen tomorrow, right? And if you look after our immediate tap into this fair value gap, it took us some time, right? And that's a possibility, of course. And again, it really all just depends on the time frame that you trade on, right? If you're a swing trader, these are beautiful, right? You have all the time in the world. You're not really fighting the options contracts, or you're getting them way far out, right? If you're looking at it from a smaller time frame, this is still great, right? I can be looking with that bullish bias throughout in the entirety of this tag inside this bullish imbalance, and I can be looking forward, right? But all in terms of the imbalance itself, prior to the trade, you know what your potential risk is in the situation. Prior to the trade, you have an idea of where you would like to take some profits, right? It can all be mapped out way before you even enter the trade, right? So, people taking big losses, it just doesn't make sense to me, because you've definitely never heard me speak or listen to any of my videos, nothing at that point. If you're taking huge losses, And you know, at the end of the day, it you know, your own self-discipline, it does come into to play. But to have this all mapped out prior, and you know this, you can almost write this down. You can go into the trade and say, okay, well, Coinbase, I see this bullish imbalance here. We just shifted structure. That's good. And now I'm looking for a retracement down into discount for a run through highs. So targeting 114.34 conservatively, write it down. Okay, here's the imbalance that I'd like to add off of. Okay, that's at $73. Where's realistically my stop? Okay, $45. Oof. Okay, so let's see. That's about $30 in risk for potential, you know, $45 to win, right? And if this is too big for you, you can even crunch it down into a smaller time frame. Come over here to the weekly, right? Okay, let's see. Below this low is at 60. Okay, now I just trimmed that off about $10 of what my potential, or $20 for what my potential downside would be in this situation, and my upside remains the same. Okay, just a way to tighten it up if the range is just a little too big. But you write that down, and you said this is how you can map out a trade. I have a perfect one actually. Here, I'll show you. I drew this out a long time ago. Oh, it's on the daily. Sorry. Here. Where is it? Here it is. Okay. Tweet, and you're gonna say, holy crap, this one took a while. This is I traded shares on this, but okay. AMD swing game plan. This was tweeted here. Okay. Long entry. Go back to the tweet. Do money sign AMD at Mando Trading. Okay, this is what it's from. I can't do this anymore, unfortunately. It doesn't allow me to, but I kept it on here for that. Okay, and it's mapped out way in advance. And look, obviously we expanded well beyond target 3, but that whole semi move to me was really difficult to kind of foreshadow and trade upon anyways, right? I didn't have anything in NVIDIA. I didn't have, you know, I traded SMCI when it broke out, and that was about it. Had AMD here, but, you know, missed out on a lot of upside, but that's fine. But this whole trade was mapped out. What is this date? September 22nd, okay? I didn't take the trade for a month. It was mapped out prior to that, right? Go to the tweet. It's all there. So here's your low to your high, okay? Now, here's where I'll walk through every single step of this trade. Every single step of this trade. And just show how price will never lie. It's all right in front of you, okay? So first things first, after taking out this high, which was also, you know, there was multiple Mando models in this run up. You know, we can go through those if you want, but here's your low to your high that took out this high right here. That's us mapping our range. We have higher time frame context. This is actually all-time highs, so if I'm not mistaken. No, it's not. I'm sorry. Here. Okay. So to me, from this point and from our overarching higher time frame trend, do you see how I'm zooming out? Look where we got into. This was just a deep discount. That's all. Right? If we go through each one of these, the entire move higher, right? All this was one big Mando model, just like NASDAQ. We can do it on NASDAQ too. It doesn't matter. Whoops. Here. Okay. Notice how we don't get into discount here, right? Yep. Smaller time frame Mando model within the overarching Mando model that was happening to get these all-time highs, right? It's kind of what like Tesla looks like right now, to be honest. But let's zoom in even more. And I hope this is informative. I really want to slow this down and break it down for everybody, because there's just not anything like this, to be honest with you. And I could show you millions and millions of examples. But here it is. Okay. Here's your high, right? Why can't I use this high? Did this low come down into discount? Nope. Right? Can we justify this bounce here? Sure we can. Of course we can. There it is. There's your new high. Okay. Now, from this point, after we already got into this imbalance, right? Note that we already tagged it, likely going to be weaker. Okay. By taking out this low right here, what is that creating? High, low, higher high, break down below. Here's your 50%. Is there any imbalance here? Nope. Okay, that's fine. Bounce. Where are we rejecting? Bearish breaker. Go to a weekly time frame, it's even more paramount. There it is. Here's your melt as we continue lower from this point, getting into discount. Can we justify this bounce right here? Sure we can. There it is. Bounce. Bearish order block. Bet you if we go to a weekly, you're going to see something even better. Okay. Here's a retracement deeper. Okay. Same bullish imbalance right here. That's okay. And that's when I started to prepare. We're close. We are close. Again, this is a tweet. Go back and check it. Okay. There's your next bounce. Turtle soup. What else do we reject here? Bearish volume imbalance. There it is. Perfect. To the tick. There's your retracement lower. Deeper into discount. Here is your relative equal low. Turtle soup sweep. Low here. Low there. Dunk. There it goes. She's gone. Low. High. Lower low. Break up and through. Retracement back into it. Gonzo. Right? So again, I obviously love my model. This could be your model in itself right here. Breaker. Right? You can wait for, you can miss this entire move and say, no, I'm playing the breaker. I'm going to go get buy side up here. Right? So that's, that's all she wrote there. I mean, it's just a model in itself. So how do we feel? Better? Good? Great? Terrible? Alright, now, there's a question from Do Hope. When you have 3 equal lows, I know you don't like, but what is the thought process of why not? Alright, so, in short, and I guess I can make this a little longer, I guess, right? The reason why I don't like when you have equal lows or the second low being a little bit higher than the first low, okay? Right? Because this to me right here, low, low, that's relative equal lows. Why? Well, we don't have any imbalance here, right? There's nothing for us in here. It's just a low wick and a low wick. So what is that telling us? Where did that bounce come from, right? That's a lower time frame level, which to me is lower probability. Also, what had to have happened here? What's the only thing that could possibly make sense from a, even somebody who doesn't know how to read price like we do, what are they going to say at this point? What had to have happened at that exact low? Somebody had to go long, right? That's the only way to explain this up move, right? Now, what had to have happened here? Same thing. Somebody had to go long to bounce this, right? Now, with that being said, when whoever it is, funds, institutions, anybody that has substantial money that can actually place an order and move price, right? If they know they can move it, do you think that they're going to go crazy with the low stop loss out of control? Probably not, because it's probably billions and millions of dollars, right? Stop losses are likely going to be right below. So in order to protect themselves in this trade, where are they going to put their stop losses? Right below. So now you have the stop losses from this. You have the stop losses from this. Okay? You have double the pool of liquidity, right? And if you have a third, then you have triple the pool of liquidity. And to me, or anybody else who reads price in here, what is the job of the algorithm that delivers price? So go get some liquidity, right? If that's the job of the algorithm, to go get more money in order to move this thing, to entice people on both sides to take long and short positions in order to generate more money for moves like this, how's it going to do it? It's going to set people up in a way to do so, right? And for anybody who might say, I don't really buy the idea of like stop losses being set right below or anything like that, right? I know this might sound silly, but I remember this from a long time ago, and when I was learning this concept, I was like, holy crap, this reminds me of that episode of Billions. There is an episode of Billions where you know, if anybody who doesn't know, it's like this hot shot hedge fund dude, and you know, he was in a situation where he was about to get smoked on a trade, like bad, right? So he had to do whatever he could. He was like, you know, taking these people out to dinner. Oh, I'll owe you one. You got me. For them to like come in and protect his position with him so that he didn't get wiped, right? And it's just interesting that like this would be the same overall idea as that, where in a situation here, whether it was the same fund, whether it's another fund coming in to protect in order to give them a bounce, in order for them to get out of there, right? Because price is going to get that liquidity one way or another. And again, these are all things that you can just back test on any chart. It doesn't matter. I know I wanted to make a point of it to just go to different, you know, tickers, right? We did a few tonight, and just also different time frames as well, right? We started on the monthly, weekly, then we went down to the 24-hour. We even did an hourly. It does not matter, right? It's all about the higher time frame context into a smaller time frame, right? So if your hourly setup is great here, now if you really wanted to even tighten this up on a smaller time frame, I'm going to keep all of those levels the same and go down into a smaller time frame, and you have the exact same thing. Okay, here it is. Discount, bullish imbalance. Here's your 15-minute chart. This is the hourly imbalance. That's your 15. There it goes. Right? So it essentially,